We've been talking a lot in these past videos about retail traders or Robinhooders against pro traders and how the Robinhooders are really moving the market right now. But the question that I always get in the comments is, how do they have enough volume to actually affect anything? Because in the grand scheme of things, retailers are considered the small pool of money, and then the institutions and the pension funds, those are the big whales. And that is true, but the retail money is no tiny amount. Robinhooders can definitely move the market. The best example is Hertz. I mean, look at this thing, 700% in a few days. Insane. And you know who was moving that? Retail traders, Robinhooders. So yes, Robinhooders are a force in the market, and they're actually big enough and have enough money that companies can look at them and want to take advantage. That's what we're going to talk about today, this huge scam that is about to be pulled on the retail Robinhooder crowd. And really, I can't believe it's even legal and that it's actually happening, but it is. So we're going to talk about it and how to avoid it. And before we start, don't forget I got that free training that teaches you the exact strategy that myself and most of our fallible people use as well. There's a link in this video and down below in the description and comments. Check it out. It should help a lot, and you'll see how using it will make sure you never get caught in a scam like this. So as you guys probably know the story by now, Hertz was declaring bankruptcy and their stock was about to disappear until the Robinhooders swooped in and saved the company. That's why you got this huge up move, really just ridiculous. And you can see the data showed that prior to the bankruptcy filing, there was roughly 43,000 Robinhood accounts that owned shares of Hertz. And then after the bankruptcy, the number of accounts nearly doubled. Here's a close-up of this picture of what happened. Hertz collapses, that's the purple line right here, and at the same time this green line, the number of Robinhood accounts just take off. And again, that's what caused this move. And while you had this happening, you had the old boomer investors, the professional money, just doing the opposite. Carl Icahn here sold all his shares before this huge run-up, lost $2 billion. What an idiot. You know why? Because he's old. Look at him. Does he even know how to use Robinhood? Does he know how to use apps in general? Does he even have an internet connection on his senior phone? I mean, what is he worth? Almost 17 billion? Who cares? This is 2020. Everything is different. Clearly, as you've seen with Hertz. Carl Icahn here is just sitting in a Dairy Queen with Buffett, drinking a Coke, eating a terrible Blizzard, just doing old people stuff instead of making money like the rest of us. And obviously I'm being sarcastic here, but I just love all these younger investors going at the old guys. It's like, sure, you got billions of dollars and decades of success, but I just made $50 in 5 minutes on my Robinhood app. You really think you know more than me? The answer is yes, these guys know more than all of us. And I'm not saying the professionals are always right. Like Icahn could actually be wrong on Hertz, but he's been around the block a few times and the logic is sound. He was the largest shareholder in Hertz. And you know, he's an activist investor, an old school corporate raider. So he's very invested in the company. And that started in 2014 and he held through early March of this year. And actually in March itself, he bought an additional 11.4 million shares. So before he sold them all off, he had 39% of Hertz shares with a total investment of 2.3 billion. So he said, I've been an investor and supporter of Hertz since 2014, but unfortunately because of COVID-19, which has caused an extremely rapid and substantial decrease in travel, Hertz has encountered major financial difficulties. Obviously, makes sense, right? No one's renting cars when no one can travel at all. So he supported Hertz's decision to file for bankruptcy. And if a company is filing for bankruptcy, it doesn't actually make sense to be holding any of its shares because shareholders are typically wiped out during a bankruptcy process. They're at the end of the line when it comes to people getting paid off. And that goes into debt structuring. It's all the creditors that get paid first. So Icahn said yesterday, I sold my equity position at a significant loss, but this does not mean that I don't continue to have faith in the future of Hertz. I believe that based on a plan of reorganization that includes new capital, Hertz will again become a great company. I intend to closely follow the company's reorganization. I look forward to assessing different opportunities to support Hertz in the future. That's a very PC statement, but I'm pretty sure if Carl Icahn is out, he's out. It's a dud, take your loss, move on. That's a sign of a good investor. But as Icahn got out, you saw that Robinhood investors flooded in. So it seems like Robinhooders are using the J. Powell strategy. Stocks only go up because if nothing else, the Federal Reserve is infallible. They have complete control over the economy, can pump in as much money as they want. They wouldn't let an old car rental company like Hertz fail. If there's a bankruptcy filing, that's a good chance to swoop in and be a smart contrarian because we know it's gonna get bailed out, right? Maybe, probably not though. And it's funny because I'm making fun of this strategy, but at the same time, it's actually smart in a way because you are are following the most important fundamental, which is liquidity. More money getting pumped into the economy does mean that stocks go up. It's the big trick about the stock market. It's all about money flows. And we talked about that in the last video, supply and demand, right? So at our macro research at our research firm MacroOps, liquidity is our driving indicator that we use. It determines everything else. And that is the research that we send to these institutions. So again, it's funny to see that people just entering the market are kind of using the same indicator, sort of. But Hertz saw this happen and now they decided, oh, we got all this fresh money coming in, all these new investors that don't know what they're doing. Let's run a scam. Let's take all these people's money, because why not? We're going under anyway. It's not like the founder of Hertz is still there, at least I don't think. It's just a bunch of executives that just want to pay themselves out and then exit, golden parachutes. And that seems to be exactly what's happening. Hertz is filing to sell up to $500 million worth of shares. This is after they were just declaring for bankruptcy. So they're literally in bankruptcy court right now and asking to issue stock. And the bankruptcy court actually agreed. And remember, in bankruptcy, the shareholders get wiped out. So why would the court allow Hertz to issue shares? And why did Hertz think they could get away with this? So even in their prospectus or whatever they put together to issue the shares, the word worthless appeared 5 times. And it had tons and tons of warnings in it with 0 details about how they're actually going to reorganize once they get that money. So when they filed for bankruptcy last month, they were already $20 billion in debt, which again, because of the CCPV, all their revenue disappeared because there was no one driving. So in their filing, they said they're in a process of reorganization, which has caused and may continue to cause our common stock to decrease in value or may render our common stock worthless. They're basically issuing stock, right? And making it very, very clear that this stock is going to go to 0. And the thing is, companies spin and lie about their results all the time. No company is going to come out and say, hey, we had a bad quarter this quarter and we're going to have a terrible quarter next quarter. If you've ever seen an earnings release, yeah, you know they don't talk like that. But in this case, they're straight up saying these shares are going to be garbage. So you know if they're being that blunt and straight up about it, then yeah, those are some real bad shares. I mean, they even recently got a delisting notice from the New York Stock Exchange because their stock price is so garbage and they're in the bankruptcy filing. But of course, they appealed that determination and they said the newly issued stock will trade on the NYSE. But we cannot provide any assurance as to the ultimate resolution of the appeal. So what you might get after they issue these shares are like over-the-counter shares, penny stocks. They even said that they have not negotiated a reorganization plan with their creditors, which again, in bankruptcy, those shares go to 0 because all that money goes straight to the creditors. So if they issue a filing and say they haven't even worked out a plan with the creditors, even if you had a sliver of hope that your shares wouldn't go bankrupt, like how can you work on that? Just 0 information about the credit structure. And here's the beautiful part. Back in May, Hertz actually restored their executive pay to pre-CCPV levels. The company also gave millions in executive bonuses ahead of the bankruptcy filing. Literally 16 million in retention bonuses to their senior managers. So they've been paying themselves off, right? Plus, if you look at the numbers, all the executives have been selling shares like crazy. Insider ownership is dropping, which is again a big signal because if the insiders are holding on to shares, then you know something good might happen because they have the most information. But those guys are dumping like crazy and then taking all the money out that they can while they can before they go into bankruptcy and all the money is sent to the creditors. So really, if they issue all these shares and there's demand for it, which they've seen, that's why they're going and doing this, then what's happening? It's basically a transfer from retail traders, Robinhooders, to this Hertz company and their executives. We'll see if they get some more bonuses before this is over, but at the very least, that money will go to their creditors. It's like such a clear scam that I don't know how the court allowed it. But at the same time, crazy stuff happens during crazy times. And normally it's the little guy who gets screwed over, the retail person. Think about in the 2008 bubble. It's not like it came out of the blue, right? If you were smart, like Michael Burry, or if you were just looking at it, you would know that when you're giving loans to people to buy houses that they clearly can't afford, and remember, they were called ninja loans, right? No income, no job, no assets, and you're getting a loan to buy this big house. What do you think is gonna happen? The retail person, in this case, or just, a normal consumer, they're gonna be in trouble because they're never gonna be able to pay this off. But the bank or the company is issuing it, they're gonna get bailed out, so they know they're gonna be okay. So sure, just profit while you can, screw over whoever you can, as long as it's within this game, this crazy game. When there's a frenzy and people buying, you could do what you want. And if we're looking looking at the stock market and this rebound and this frenzy of people coming into the market, like we mentioned in previous videos, this could be the start of a massive bull run. And what you want to see in a true sentiment fueled run in the market is a lot of participation from everyone, not just professionals, but retails. Everybody you know is talking about stocks. I always use the example of Bitcoin because it's the most recent one, 2017. You couldn't jump into an Uber without your guy telling you about his Bitcoin investments, right? That's what you need to feel about stocks. And then when you're feeling that, it's probably a good sign that things are about to turn. But if we look back here, this collapse that happened for a good reason, you know, the CCPV, but from a sentiment point of view, there's still a lot of bears. And those bears are still here, even during this huge run up. The sentiment is just now starting to turn. Actually, it still has yet to turn. But until people are super bullish and people are taking out second mortgages on their home to throw into the stock market, everybody's getting over leveraged, until there's no more money to be put back into the market, this thing can keep running. And that's when you get the mania that creates bubbles. And that's when certain companies will take advantage of it. And actually, it's not just certain companies, it's everybody. Our buddies at Hertz here might just be the first of many companies that will jump on this trend. Is it ethical? No. But is capitalism always ethical? No. You got a bunch of executives, you put them in this game, and the rule of the game is make as much money as you can. That's what shareholders want, right? So go ahead then, issue shares that are going to be worthless. Don't hate the player, hate the game, right? But that's also why we have courts and laws to put rules to the game. So again, I'm surprised that the court allowed it to happen. Now, the idea of sorting through companies that are really beat up, that is a valid idea. Not in the way that it's been done with Hertz, but in other situations. It's called like a graveyard strategy. What you're doing is finding these companies that are close to bankruptcy and then looking deep into the fundamentals, like really combing through to see if anything has changed. Because the stock market is pretty accurate most of the time. If a stock price is really low, that means that the company is probably pretty bad. Like you can look at this chart of Hertz and it just falling year after year. This wasn't all just from the CCPV. I mean, this is just not a good company. And that's why this graveyard strategy isn't easy, because you really got to dig in. And again, you got to see if something has changed in that company that investors in the stock market haven't picked up on yet. So it's a purely fundamental game. And the idea is that this company has been beat up so bad that everyone has just left it for dead. No one's even looking at it anymore. And when no one's looking at something, you know, that's where the opportunity might be, because they're not going to realize that something changed. And the actual hit rate of finding these graveyard companies that do look set for a turnaround is very, very low. Because like I said, stock market is accurate most of the time. So there is a potential strategy around this, but the whole thing with Hertz, this is not it. This is the Jay Powell strategy. Stocks only go up. This is the Davey Day Trader global strategy, the Barstool strategy, which really is more gambling than anything, which I don't necessarily think is a bad thing, as long as you know what you're doing and you're using, you know, gambling money for gambling. Stock market has always been a great place to gamble, and it's only going to attract more gamblers when you see crazy volatility like we saw in Hertz. 600% in a few days? That's some good money. That's exciting. And that's why everyone loves options so much, because if you think stocks move a lot on a day-to-day basis, which they have been recently, wait until you see how options move. And again, it's that addictive volatility that's so much fun to gamble on. And like I said, I'm not against gambling in the stock market as long as you know what you're doing and you know it's gambling. Don't call it investing. Don't put your life savings in there. A real strategy is like the one that we show in this training. Link in this video and down below in the description and comments. But you'll see it's not super exciting, because investing, good investing, isn't supposed to be. It's not supposed to be a ton of action. Because you'll see, like with this strategy, my main thing is to stay away from the market. Like I made it as low cost as possible in terms of time. Obviously, you know, you could invest as much money as you want in any type of strategy, but myself and most traders, in fact, you know, all traders, just do much better when they're not glued to the screen, because that's when you overtrade, you screw up, you lose money, which I know is the opposite of what's happening now, because everybody's a day trader all of a sudden. Very, very few day traders are successful, but you know that. I think everybody knows that. But anyway, you could check out this training if you're interested in putting a long-term strategy in place. And if you haven't already, make sure you subscribe to this channel so we could talk about more crazy things happening in this market in the future. So do that, and I'll see you in the next video. Stay fallible out there. Bye.